Good morning, everyone. Namaste. My name is Sriram Iyer from the Commodity Research Desk at Reliance Securities. This is the weekly gold outlook. So, gold futures in the international side and domestically ended higher for April and rose for the second straight month on bets that the gold dollar could fall again soon. Gold for June delivery in the international side on the futures, COMEX futures ended at 1999, up by 1.5% from the March close. It was the fifth positive month in 6 months. The price rise was seen despite the dollar rebounding lately on expectations that the Federal Reserve could embark on a 25 rate hike in the month of May. When the policymakers meet to review the success of the US monetary policy in fighting inflation. However, gold prices found support in April on expectation that the Fed may be done soon with its rate increases possible. Even could signal a pause possibly going forward, but that could depend on the incoming data. So looking ahead, we see that for the coming week, the Fed meeting will be the key, which is scheduled for tonight. Central bank, as expected, is widely expected to hike by 25 basis points in response to robust US economic data, recent robust economic data apart from the jobs numbers. But the main force driving the Fed towards 25 basis points is the higher inflationary pressures. Recently, data in the US has suggested that the core CPI remains sticky. That may be the case why the Fed will continue its rate hike, and possibly may also indicate that we may not be done. But there is a fair chance that the recent jobs numbers which came out yesterday, Joel's job opening, may or could prompt the Fed to signal a pause. There is a fair chance that it could do that. But they could also add that the fight against inflation may not be done yet and may need one more rate hike in the month of June as well. So again, the key trigger will be the Fed meeting today. And we see that, of course, market is already priced in 25. We feel that the Fed could say that the incoming data will be a key trigger for the Fed to move ahead on rates, and we see that will be the outlook going forward will be the key for the gold prices, at least in the short run. Apart from the Fed, we also have the ECB meeting, the European Central Bank meeting, where everybody, in fact, most of the markets have already factored in that the bank may hike anywhere in the range of 25 to 50 basis points. If the outlook given by the governor, ECB Governor Lagarde, if it is more hawkish than expected, then we see the euro rallying against the greenback, and that could lend some support to the gold prices in the coming week or so. Going forward, the outlook by both governors, Fed Chief Powell and ECB Chief Lagarde, will be the key trigger for the markets. After the meetings, though, markets could also look ahead to the incoming data. We have the US is scheduled to release the non-farm payroll numbers on Friday, and that could also have a big trigger on the market. So all eyes could also shift towards that jobs numbers on Friday's session. So for the week, we expect that the markets will be extremely volatile again in the next 2 or 3 sessions, especially after tonight. Markets can remain volatile, and we are giving a big range because of this volatility in the markets. So domestically, we see a range of 59,500 to 61,300 levels for the domestic futures, while internationally we also see a big range of 1950 on the lower side to 2050 on the upside. Of course, these ranges could change after the meetings and the incoming data. So that's it from our side. Thank you very much for listening. Have a pleasant day and a week ahead. Thank you.